Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So I don't necessarily have to be dealing with debits and credits. The option prices take care of all that. Volatility, the underlying exchange rate vol, is very important. The more volatile the exchange rate pair, the greater the option premium. These volatilities are dynamic, though they change each and every day. And I'm going to come back to that in a couple of weeks, talking about options volatility. Leverage, what is it? Well, in physics, it's a factor by which the lever multiplies the force. But in finance, it's defined as using given resources in such a way that the potential positive or negative outcome is magnified. So magnification can be good if you're right, and can be very, very bad if you're wrong. So you need to think about it. Leverage is a double-edged sword. Leverage is determined by the strategy selected and the strike price selected. So options give investors many alternatives. Each investor can select the appropriate risk-reward. And leverage has to be chosen by each individual investor based on their own goals and their own risk tolerances. This is going to be the next webinar. Which strike price to trade? Again, that presentation going to be January 27th. And I'll spend 45 minutes on that. It was going to be actually, I said tomorrow. It's not going to be tomorrow because we actually moved up this presentation. But which strike price to trade is going to be your analysis of the market relative to the risks of the market. Then you can decide in, at, or an out of the money options. And that's coming on January 27th. Options are dynamic. So the premiums are going to change each day based on the exchange rate, time left, volatility of the pair, and the interest rate differential. So let me go through the features of these options. Number one, they're options on the exchange rate. They're U.S. dollar based. We have 50-cent strike prices. Premiums quoted in U.S. dollars. European exercise. All that means is that you can't exercise these early, but you can always close these out anytime that the ISE is open. They're cash settled, noon settlement on the expiration Friday. You need to have an equity brokerage account. So if you're in Europe, you're in Asia, wherever you are in the world, you're in Ireland, you just need to have access. And there are a lot of brokers that are all over the world that you can actually, that's not difficult to have. You just need access to an equity options account. You do not need to set up a separate account as long as you have that equity options account. Market makers quote this, and these are traded from 9:30 to 4:15 Eastern Time, but we are going to expand, more than likely, the SEC here in the States, hopefully is going to approve our recommendation to increase trading hours from 9:30 to 7:30 because there's a lot of action in the morning. I think you all know that. We now have added these dual conventions, so we have the spot. We added the AUM, GDP, EUU, and NDO. And please come back to fxoptions.com. There's tons of information, tools there that you could use. I built this on December 4th. Interesting to see the dollar, the Aussie dollar up 41% last year. Euro up about 18%. Amazing, right? I mean, I think that's amazing. This symbol's wrong. This is not EUR, so sorry about that one. EUU. Options are about forecasts, so it's up to each investor to determine their own forecast. So whether you think the market's going to be moving in a big way, a moderate way, small way, there are options out there, different strike prices, different months. So to summarize, when you think about trading in the FX market, first of all, you're going to have a forecast. Then, if you're looking at the options market, which I recommend you take a look at, you're going to want to think about how much time do you think you need. And when I say that, I always like to remind investors that if you think you need 20 days, because there are 22 days in a trading month, you might want to give yourself 40 days, 2 months. give yourself a little more time than you need because you don't want to be up against the proverbial gun that you're running out of time. So give yourself a little more time. And then as far as strike prices go, we have in the money, at the money, now the money options. I'm going to get to that on January 27th. But the out of the money options offer a lot more leverage. The in the money options are going to trade a lot more like the spot market. But it's very difficult. You're not going to, I shouldn't say it's very difficult. You probably could create positions that are somewhat similar to the spot market with massive leverage. I'm not encouraging you or recommending you to do that. Massive leverage can cause massive problems. So you want to trade within your own goals and your own risk tolerances. Sellers of options receive these option premiums. They also receive substantial risk. So to summarize what I spent the last 50 minutes on, you should always, when you're looking at these options, think in terms of the base. So I'm just going to look, using the example of the U.S. dollar against the Canadian dollar, I look at the base currency. Base here is the U.S. dollar. If I think the dollar was going to be moving up, I might be looking at calls. If I thought the dollar was going to be moving down relative to the Canadian, I might be looking to purchase put options. So I hope that's clear. I think it's easiest to look at the base and draw your view. Of course, this is a ratio of dollars versus U.S. dollars versus Canadian dollars, but look at the base, try to form your view because it's relative to the quote currency. Options allow you the ability to transfer risk more efficiently than spot trading, in my opinion. They give you the right to buy or sell the exchange rate, and they're cash settled, so you don't have to worry about having to deliver Japanese yen, Canadian dollars, what have you, Mexican pesos. But you can trade these ICFX options, and they are going to be cash settled. Premiums are multiplied by 100, so if I looked at a $1.50 premium, and in fact, let's just go back. If I go all the way back to the beginning of the presentation, the option premiums, if I see, let's say that this was done a couple weeks ago, if I was looking at the January 104 calls, those options were quoted at about $250, $270, so that was going to cost me about $274. That would not have been a good trade as we stand right now because we only have not much time left and we're down at 103. If we would have known then what's going on now, I might have looked to buy, let's say, the Jan 105 put, trading at $1.90 that's probably today is worth $250, $260, $270. And it probably was even worth more than that at some point. Options are going to actually decay through time. So if you get a big move, you can actually close your option. You get back in. You can get back out. You need to watch these premiums. So you multiply the premium by 100, though. And that's how you would come up with that nominal dollar that would be taken out of your account. You do need to include commissions. The settlement values are calculated by the difference between the strike price and the exchange rate at expiration. These options can be accessed through your equity options account. Purchase of options allows investors to benefit from selecting the correct direction of the currency pair without risking more than your initial cost. There's lots of strategies out there, so it's not just buying calls and buying puts. I'm going to get to that in the next 7 back to basic classes, though. The ideas of credit spreads, hedging, more complicated strategies such as straddles, strangles, that's all coming in the next couple of months.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.